Well, holy smokers, folks, this ain't no dang jokers. The stock market is about to flip. In this video here today, anybody that is into numbers and data and the stock market, you're going to enjoy this one because, boy, do we have a lot to go through in this video. I'm going to probably flip your flapjacks at least twice in this video, okay? This is a holy smokers, ain't no jokers video. Like I said, anybody that really is into numbers and really getting into the nitty-gritty of the stock market and trying to figure out what's about to happen here, you're really going to enjoy this one, okay? And essentially, what we're looking at here, we're looking at essentially two scenarios that are likely to play out in the stock market right now. I've been doing this game for a long, long time, and I've seen these scenarios play out many times. And you got to understand, in regards to the stock market, there's a million scenarios can play out all the time in regards to the stock market. There's so many different things that can happen. People just think all stocks go up or all stocks go down. That's only two scenarios. No, okay? Certain stock groups go up while others flounder or go down, and vice versa. And there's literally a million different things that can happen in the stock market, but there's two very realistic things I think are about to play out, and I want to explain the numbers behind this and what's going on here and why I personally believe this. So hope you guys enjoy this video here today, and it's like I said, a lot of you guys that enjoy the numbers, you're going to definitely enjoy this one. So all I ask in return is that you smash that thumbs up button, make sure you're subscribed. If you're not subscribed to the channel, what the heck are you doing? I think we're about to hit I want to say 700,000 subscribers, something like that. So appreciate all you guys being here as always. Much love. And yeah, also, just so you know, very important here, the September private group registration's almost full for the October classes. I think there's just a few seats left for the growth sessions with the seven-figure coaches in the private stock group. So if you're looking to check that out, apply with the pinned comment down there. That will be the pinned comment down there. Those spots are almost taken, okay? So first off here, I want to start out with the Dow Jones Industrial average. So the markets are right around all-time highs, right? It's not just the Dow. It's also the Nasdaq, the S&P 500. Everybody's looking at the markets near all-time highs. And when you see the Dow, Nasdaq, S&P 500 near all-time highs, what's the first thing that would usually come to your mind? Well, the first thing that would usually come to my mind is, oh, we must be in a greedy stock market right now, right? Everything's flying high. The indexes are near all-time highs. We must be in a greedy time in the market where, you know, everybody's just in greed mode, right? But the weirdest thing about this stock market, and there's a lot of weird things we're going to get into this video, the very strange thing is if you look at the data, we're actually not. CNN Business has a phenomenal fear and greed index. And it tells you kind of the emotion that's driving the market. Right now, we're actually in fear mode. Now, are we in extreme fear mode? Absolutely not. But if you were to just look at where the Dow's trading at, the S&P 500's trading at, the Nasdaq's trading at, you would think we'd be at extreme greed or pretty dang close, like somewhere over here. And yet we're in the scenario where we're at a 32 right now. We're in fear mode. And this is where this is where it starts to fry people's brain, because they're like, well, the stock market's near all-time highs. We're in a fear market, right? How's that even possible, okay? Well, you got to understand what goes into this particular index, okay? So, because I can tell you a lot of people look at that, or maybe you've never even seen that before, but a lot of people look at it, but they don't even know what actually goes into it, okay? The first thing is stock price momentum. The S&P 500, SPX, versus its 125-day moving average. The second thing is stock price strength. The number of stocks hitting 52-week highs and lows on the New York Stock Exchange. And guess what? We have a good amount of these stocks hitting 52-week highs, but man, do we have a lot of stocks hitting 52-week lows. Isn't that interesting, okay? Stock price breadth. The volume of shares trading in stocks on the rise versus those declining. Put in call options, okay, which put in calls, just so you guys know, if you buy a put option, you're essentially placing a bet that a stock price is going to go down to a certain price by a certain date. If you're buying a call option, that means you're expecting a stock price to go up to certain prices by certain dates, okay? Put and call options. The put and call ratio, which compares the trading volume of bullish call options relative to the trading volume of bearish put options. Junk bond demand, very important. The spread between yields on investment grade bonds and junk bonds, market volatility, the VIX, which measures volatility, and safe haven demand. The difference in returns for stocks versus treasuries. For each indicator, we look at how far they veered from their average relative to how far they normally veer. We look at each on a scale from 0 to 100. The higher reading, the greedier investors are being. And 50 is neutral on this, okay? And so look at this in depth over the past few years. Extreme fear obviously is near this line at 0, right? 0 would be literally like every single person, I don't even know if you can get down to 0, but that would be like literally every single person doesn't want to buy anything, okay? And obviously 100 would be like, my gosh, okay, holy smokes, ain't no joke. I mean, buy everything in sight, call options, anything, buy it, okay? And what you're going to find here is back in late 2018, we went through a period of essentially extreme fear in the market. And once you get under 20s, you're in extreme fear. And this was a very strange time in the market. I was buying stocks left and right during this time period, and stocks were just being decimated all over the place. Very strange moment in the market because it wasn't like we were going through a recession at that time. It wasn't like we had some out of the ordinary thing that was happening. There was some talk about Fed raising interest rates, stuff like that, but it wasn't like we had a big reason to be like, oh my gosh, crash stocks, okay? And we went through this period where the market got insanely scared. And needless to say, it was a great time to buy just about anything, okay? Big tech, small caps, mid caps, it didn't matter what you were pretty much buying. And then we went on a crazy run coming out of that over the coming months into 2019. And led into some closer to, some more greedy times, right? And then look at this. Shortly before Rona starts, we were going through an extreme greed period, okay? This is basically going into 2020. A lot of people were feeling very good about the markets and very good about the stock market in general and a ton of stocks, right? And to be quite honest, there was a lot to be bullish about during that period. And we were going through a period of almost extreme greed. Then what happens at the very beginning of 2020, all of a sudden, hey, there's this thing called Rona. It's kind of going around. And then, needless to say, next thing you know, it was national news. Next thing you know, countries are shutting down. And we had an extraordinary extreme fear period where, we got really dang close to 0 on the fear, on the fear index. It was a very, very scary time, right? Follow that up. Going into late 2020 into, early this year in 2021, we were going back into kind of extreme greed period, right? And let's be honest, remember, it was like every stock out there was pretty much going up a ton. There was it was a great time in the market. There's a lot of money to be made, and including a lot of small caps, were reaching right around all-time highs. And then after that, we started to slip. And here we are today at about a 31, 32, somewhere around there on the fear index, which is significantly under where you should expect, because usually we should be this green line right here, okay? We should usually be that line. That's where we should be. And clearly right now we're significantly under it. Not a little bit, we're significantly under it. Yet, once again, the markets are all at near all-time highs. So it's just an interesting market. It's a market in which it seems like there's a lot of cash on the sidelines waiting for something to happen, right? Like a lot of cash on the sideline, like, come on, something's got to happen here, right? And that's what you kind of expect in a market where you're going through a fear period, yet things are at near all-time highs, okay? Very, very interesting. Now, something not a lot of folks look at when it comes to a fear and greed index outside of, the true fear and greed index, I love to look at Bitcoin price. I think Bitcoin price is a secondary fear and greed index, essentially, okay? In time periods where folks are feeling, really great and extremely bullish, guess what? Bitcoin tends to be an asset that obviously does well in those times, right? But in other times, when folks are a little more uncertain and obviously fearful, Bitcoin tends to have some troubles. And if we look, guess what? Bitcoin 63,000 plus back in April. Today it's at 44,000. Not like Bitcoin is down to 10,000 or something like that. I think if Bitcoin was at even like 20,000, I think if Bitcoin was at 20,000, that would be an extreme fear scenario. We're not at that right now, right? But you got to admit, and all of us have to admit, like we're significantly off of where Bitcoin was, a few months ago, almost 20,000 difference here, okay? Now, let's take this one step further, and you're going to see this play out right in front of your eyes. So remember what happened in late 2018? We looked at the fear and greed index for the stock market, and what was going on then, right? It was near all-time highs as far as any time recently, right? And the market was extreme fear. Guess what else was extreme fear? Bitcoin. Bitcoin was at 3,600 at that time. It had just fallen off a cliff from 20,000. And I don't know why it doesn't go up to 20,000 here on this chart, but it hit 20,000 for a very short amount of time. And then, all the way down to 3,000 and change in December of 2018 when we were going through that, time period where the market was in extreme fear, okay? Then you look at this, Rona. Guess where Bitcoin was at? Some of the lowest it had been at in quite a while, right? During the peak of Rona. And then, guess what else happens? Well, less than 6 months after the stock market fear and greed index peaks, guess what else peaks? Bitcoin as well, okay? Isn't that interesting? Within 6 months, it's about 4 or 5 months after, right? Bitcoin peaked, okay? Isn't that interesting? And so I actually look at Bitcoin price from a standpoint of if you want to understand how the general financial community is feeling, greed or fear, those sorts of things, also look at Bitcoin. I believe it is a great secondary thing to look at outside of the fear and greed index that CNN Business puts out there, okay? Now, let's go over to Yardeni. Now, we've been talking about this for a little while. Large caps, this is something you have to pay attention to if you care anything about the stock market, okay? You want to look at large caps. And we're coming down a bit as far as valuations of large caps. That's good, okay? Good, somewhat good news. But my gosh, are we still trading unbelievably rich? And this adds another element into the stock market, right? That is a source of confusion. Because we're not, literally, when's the last time we had to cross this path? You have to go all the way back to 2001, 2002 range, right? To find a time period when we were trading this rich for large caps. Now, also keep in mind, what happened to large caps for years after that? Basically, valuations fell and fell and fell for large caps for years. Now, something very important here, this does not mean this is going to play out this way again, okay? Because everybody wants to always draw things back and they're like, the stock market did this in the past, so it's going to do this. Does not mean that that's going to happen at all. But this is some food for thought that we have not been trading in these ranges literally since that time. And you have to be ready for a potential major fall in large caps. It does not mean it will happen, but it's absolutely something we have to keep an eye on because there's no debating if large caps are trading rich or not. I don't care how bullish or bearish or in between you are in this market. Facts are facts at the end of the day. And the fact is large caps are trading the richest they've traded in 20 years, guys. That's the bottom line there. And this is something that makes me say, this is not a time period when I think it's just easy to be a stock picker, right? There are certain time periods where it's like, dude, just buy the large caps. You're going to make a bunch of money, right? And there's certain time periods where large caps can get really scary. And I feel like right now we're going through one of those periods where you have to be at least prepared for a 10 or 20% fall in these stocks. Doesn't mean it's going to happen, but when you're looking at valuations up here and you haven't been there in 20 years, I can tell you there's a whole lot more risks to these type of stocks than there is reward, okay? And everything in the stock market is a risk-reward game. Everything, okay? And when you're going through a time period where the reward is not that big and the risk is gargantuan, it makes it so hard for you to continue that uptrend, okay? Very, very key. Now let's go ahead and flip it. And what we look at here is S&P 600 small caps. And look at this. I mean, you would just assume the small caps have to be trading at even a richer valuation than large caps, but no, okay? We're trading insanely low at a 15 and a half, roughly, somewhere around there, right? Now, in the past 20 plus years, there's only been three real time periods where we've been trading that low. We dipped low for a very, very short amount of time. That was obviously in the 2018 crash there, but it was like a blip, right? It was like a second. And then obviously running around time, like a blip, like a second, okay? But in terms of like an actual many, many months or even a year or two of a time period where we are trading at lower than this, right after the tech bubble, right? We in like 01, 02, maybe in 03, a little bit in there. Small caps traded really, really low for a significant period of time. During the Great Recession, coming out of the Great Recession, right? 08, 09, small caps really, really low. And then the last period was 2011. This is the most recent time period, essentially. 2011 into 2012. And you look in that time period, and for a significant amount of time, small caps traded cheap, okay? And so something to keep in mind here is small caps could, keyword is could, trade, let's say down or around where they're at for maybe a year. It doesn't mean they're going to. They could be, they start moving next week, right? But just to keep in mind, sometimes these periods of time where small caps are down can sometimes last a year, okay? And so that's just some food for thought there around valuations on small caps. And so this is why with me, I've been loading up on small caps, obviously, and I plan to continue to load up on a lot of small cap companies. Like a lot of the companies I've been buying recently, $2 billion and under actually I'd say under $5 billion market caps, right? Those are really the ones I've been loading up on in recent months and plan to continue to, right? And the reason being is they're just trading so dang cheap. Also, keep in mind, I'm going to likely start buying call options on a lot of these stocks. But what am I going to do? I'm going to buy over 2-year out call options, not that are expiring next year, right? And because I want to give myself more than a year, because I understand that small caps could trade down here for a year or so. Doesn't mean they will, but they could. And so from that standpoint, I want to buy options that are further than actually 2 years out, okay? And this is why. Very, very important there. Remember, this whole game in the stock market around making money is risk, reward. How much risk am I taking? What's my reward potential? Now, out of all these slides, you know, some of these might have blown your mind here, okay? But nothing takes the cake over this one, in my opinion. We're looking at the PEG ratio, the price to earnings growth. And once again, with the stock market trading near all-time highs, we would assume the price to earnings growth you would be paying for stocks is very high, very, very high. But what we find is the price to earnings growth has only been down here a few times, right? Obviously, right during the Rona crash. Obviously, back in that very short amount of time for that time period we went through in late 2018, right? Back in about 2011 into 2012, that period, during the Great Recession, and that's it, in the past 25, 26 years, okay? This slide, like, I look at this sometimes and I'm like, is this really accurate? Like, I have to start, like, running numbers and I'm, like, trying to figure out, I'm like, is this really accurate? Because it's literally, if you're really into the stock market stuff and you're into this number stuff, it really is so dang mind-blowing, okay? It really is. Because just like conventional wisdom would tell you, stock market near all-time highs, it has to be a very, very high PEG ratio, price to earnings growth. And it's just not even remotely close to that way, okay? And so this is something that, you know, makes folks think, dang, maybe we're not trading that rich. Maybe the stock market is actually ready to go on another major hungry bull run, okay? And, you know, that's something that I even think about, and I'm like, you know, all this talk about, you know, could we go down? Could we trade sideways for a while? Maybe we're actually setting up for actually a major, major bull run. And when you look at, like, if this was all the data I had, let's say I had no other data in relation to the stock market, and I was only allowed to look at this slide. If I was only allowed to look at this slide right in front of our eyes here, and that was all I had for data, I would say we're about to go on a beast bull run. If that was all you gave me, right? A beast bull run. Now, obviously, we have more data than obviously just the PEG ratio, but the flat out honest truth is if this is all you gave me, I would say, dude, we're about to get ready to get your flapjacks flipped. That's all I say about that, okay? Now, there's another crazy element we have in the market is the Chinese stocks. So in relation to anything that does business in China or is an actual Chinese stock, because you got to separate, obviously companies like Win and LVS, they do a significant amount of business in China. Meanwhile, you got other stocks like Baba. NIO, I think, is at $35 here today. Obviously, Baba's been falling a lot, and a lot of the Chinese stocks in many different industries have been falling. The gaming stocks, because they get such significant amounts of their revenues and profits from Macau and China in general. Those stocks throw another wrench in this whole system, right? Where we're looking at this and we're like, man, some of these stocks are at, near 52-week lows. Like LVS is at, the lowest it's been in quite a while, right? Win's at 82 and it's looking like a snack, but you have all this confusion out of China and what's China going to do? And it seems like every single day or every single week right now, China is in the news for something negative in relation to the economy, stocks, control, something. And so it leads to, once again, this fear scenario we're seeing in the market where it's like, do I really want to buy Alibaba? It looks like the greatest deal ever if we look at the financials and the valuation, but they just had this situation where all of a sudden they're going to have to give a third of their cash away to Chinese initiatives, and it's like, that's a little fishy. And you just had a lot of Jack Ma related situations there, and you've had China kind of almost seem like Alibaba's an enemy, and big tech stocks in China are an enemy, and it's like, what is going on there? And so that adds another element to this market that makes it a mess. And then you add the Evergrande or Evergrande situation, depending upon what you want to call it. I like Evergrande because it sounds cooler than Evergrande, okay? And no, we're not talking about the ship that got stuck in the Suez Canal. This is a situation where a lot of folks are like, okay, what does this mean for the Chinese real estate market? Are a bunch of developers going to go down in China? Is the real estate market in China going to stall? If it stalls, what does that mean for the Chinese economy? What's that mean for stocks in Chinese citizens that own stocks? And what's that mean for the ripple effects to the U.S. markets? What's that mean for the crypto markets? How much Bitcoin is owned in China or cryptos in general? Are they a very small amount? Is it a large amount? What happens if that? You go really go down that rabbit hole, right? And start playing the dominoes game. And it's like, well, if this domino falls and this domino falls, and if this domino falls and this, holy smokes, that's a whole other subject there, right? We went into that into detail very recently as far as the Evergrande situation, right? But yeah, once you start playing that domino game, it gets a little crazy, and that's another reason why I can understand folks being a little fearful out there when you got something like that, and it's like, oh, that company has 300, not million, but $300 billion in debt? Oh my, okay? Then you look at this. The two crypto brokerages that are public companies that are really everybody knows, Coinbase and Voyager. Look at those stocks. They've been devastated, right? Coinbase trading at, near its 52-week low. It's not at its 52-week low, but it's a lot dang closer to that 52-week low than its 52-week high, right? And so you have almost Wall Street saying that they feel like maybe crypto's best days are right now, or crypto could be in maybe a multi-year bear cycle. Because if you look at Coinbase's valuation based upon the type of profitability they're going to have, it doesn't look rich at all. Like not even remotely. Voyager. Look at Voyager's forward P on that stock, and you're going to be like, what? Okay, Voyager's trading at $10 here today. And so this adds another element where it's like, okay, does Wall Street know something here that we don't? Okay, does Wall Street know that crypto is about to go through a year or multi-year bear cycle where price declines? Or is Wall Street just clueless in this scenario and crypto is actually going to be in a great position over the next few years, and Coinbase and Voyager are going to make bank on that? This is another situation that we have to ask ourselves, and people don't know the answer, right? Maybe Wall Street knows something, or maybe they're just clueless and they just are making a huge mistake by not buying Coinbase stock and Voyager, right? Voyager 52-week high is $30. Once again, that stock is $10. It's $10 here today. I mean, it's incredible. It's got one of the strongest growth companies you'll find out there, period. And yet the forward P is like, oh my gosh, I think the company's expected to earn $1 something. in EPS, and the stock's trading at 10. Do the math on that, and you're going to find one of the most ridiculous revenue to forward P situations you've ever seen in terms of, it looks like the greatest deal in the history of mankind. But maybe Wall Street knows something. Maybe crypto is going to be ugly for a while. That remains to be seen, okay? Then we got to talk about the elephant in the room, that is Tesla, my Tesla, okay? Tesla, my Tesla. No, I'm not talking about Tesla, my Tesla running the Hungry Bowl, okay? I'm talking about Tesla. So Tesla is a stock that we all have to admit is a very important psychological stock for the entire stock market. Now, is Tesla as talked about as it once was? Absolutely not. But is Tesla still the most important stock for the stock market in terms of psychological reasons? In my opinion, yes. Okay. I did a poll tonight on my Instagram. Okay. And in that poll, I asked folks, do you own Tesla stock? Over 50% of the people that responded so far say they own Tesla stock. So you're looking at a stock that Wall Street owns heavily now. We know folks like Cathie Wood, that are some of the most popular folks in the stock market, own the stock heavily. We know retail investors own the stock very heavily. So it seems like almost everybody's got a little something in the game when it comes to Tesla, my Tesla, right? It's in the S&P 500 now. So this is a very important stock for the psychology of the stock market and how people feel around the stock market. And as Tesla was climbing to new 52-week high, the whole market had a very positive vibe, okay? And what ultimately ended up becoming more of a greedy vibe, right? And we saw Tesla peak out at the very beginning of this year, right? Somewhere around January, maybe February. Stock peaked out at $900 and has yet to get anywhere close to that, right? It's been doing pretty well lately at $774, but let's be honest, that's a long dang way still from we're $100 plus away from its 52-week high. So if this stock can reach back up to 52-week high, I think there's going to be more positive vibes overall in the stock market and positive emotions. But as long as the stock is under, $100, $200, $300 under that 52-week high, I think there's going to be an overall feeling of kind of meh in the stock market right now, and that's what we've seen, okay? Now, there's two scenarios I see playing out here based upon all the data we just looked at and all the information there, okay? And the two scenarios I see playing out here is, one is big tech money rotates to mids and small caps. Now, when I say big tech money, and let's just call it large caps, because it's not just big tech, but it's just large caps in general, okay? This does not mean Apple stock goes down 28%. This does not mean that Google stock falls 35%, okay? A lot of people think, well, if money's going to rotate, then those stocks have to crash. No. Literally, if those stocks just sold off 3, 5, 7, 10%, the amount of money that would generate, that would rotate into mids and smalls, would be incredible. And keep in mind, when it comes to money velocity in the stock market, and especially in regards to mids and smalls, it doesn't take a whole lot of money to move those stocks up significantly and see a mid cap go up 20, 30, 40% when some of that money rotates, and see small caps go up 60, 80 to 100% in snaps of a fingers, okay? It happens quickly because it's big money, okay, that's rotating. Not like, oh, it's a little chunk of change here, okay? Big money. That's scenario number one that I can see playing out. The second scenario is smalls and mids move up, but it's because new money flows there. So rather than someone like myself that says, okay, I'm going to move a certain amount of money into the market each month, right? I can move that money into the large caps, but you can see me, I'm not doing that, right? I'm moving my money into smalls and mids. Now, I'm usually almost always ahead of Wall Street in regards to the moves, right? I like to get in 6 months, 12 months before Wall Street gets in, right? I like to make my moves before, way prior to they start moving in money, okay? But what I see playing out here is essentially is where Wall Street's going to look at the valuations of large caps, right, in big tech, and they're going to say, should we move money there? What about these mids that are beaten down? What about these small caps that are devastated, right? And so they start moving that new money into to the smalls and mids rather than saying, I got to go buy this massive market cap over here, right? Rather than saying, I'm going to go buy more Microsoft stock or go buy more Walmart stock, I'm going to go put some money in the smalls and mids over here, okay? And that ends up moving up those stocks in a significant manner. And so I think we're counting down the time between now and when the smalls and mids move up. No one knows the exact date, including myself. No one knows the exact date when smalls and mids will move, but I can almost promise you, outside of a massive recession or something weird happening like that, or Roni Rona Part 3, outside of some crazy scenario, smalls and mids are set up in a position where they're ready to move huge. Just no one truly knows exact that moment. Like, it's happening tomorrow, it's happening next week. We can all guess, we can put in our guesses, but there's no doubt the smalls and mids are in a great position to move up, either by new money flowing into those or by small sell-offs in actually big tech, in the large caps in general, and that money moves over. Rotation of money. I've talked about it a few times on the channel. Rotation of money. The money will rotate out of smalls and mids into the large. Money rotates out of large into smalls and mids. One big game from certain industries to certain others, to certain sectors to others, from even international markets to others. And with everything that's going on in China, don't be surprised if some of that Chinese money finds one way or another to make it over here as well, guys. That's some food for thought. So yeah, in terms of who gets the bags of gold in the end, I believe it's the investors that know how to position themselves the best in a scenario like this. And that's just how it always plays out. The ones that position themselves ahead of time are always the ones that prosper the most, okay? If you enjoyed a video like this, don't forget to smash that like button for me. That lets me know that you enjoy a video like this where we go into a ton of the numbers and data, things like that. Also, if you want to subscribe to the channel so you can be notified every time I drop a video like this, definitely subscribe to the channel there. Once again, I've got a few spots left for the September private group registration for those October classes, the growth sessions with their 7-figure coaches. If you're looking to grab one of those before they're gone, that will be pinned comment down there. Much love as always, guys, and have a great day.